Let's Talk Accounting answers the question, what is? Removing the jargon of accounting, finance, and business. Shedding light on some of the jargon used, clarifying the jargon into everyday words you'll understand, and get a clearer view of what is happening in your world, building your confidence in the world of business. Let's get started. Next. Number 36. What is gapping? Gapping is taking advantage of a time difference. E.g., borrowing short to lend long because it gives a better interest rate return for the lender. In normal markets, the short-term rates are lower than the longer term. Find stocks that have a price gap from the previous close, then watch the first hour of trading to identify the trading range. Rising above that range signals a buy, while falling below it signals a short. Next. Number 37. What is gearing? Gearing refers to the relationship or ratio of a company's debt to equity. It shows the extent to which business operations are funded by lenders versus shareholders. A gearing of higher than 50% is considered highly geared. A gearing of lower than 25% is considered low risk. A ratio between 25% and 50% is considered optimal. Next. Number 38. What is the gold standard? Originally, a gold standard was literal, it referred to gold being the official measure of money. Gold is no longer used in this way, though it's still valuable, so the term has taken on a looser meaning. A gold standard is simply a great or excellent example. The best of the best. Next. Number 39. What is goods and service tax? GST is a tax on every good or service which is added to the retail price at which they sell. Also known as a consumption tax or value-added tax. GST is paid by the consumer for the product or services. It is remitted to the government by the business providing the product or service. To add GST, original cost times GST percent, divided by 100. Net price equals original cost plus GST amount. Next. Number 40. What is gross domestic product? GDP, it's a measurement of the flow of goods and services produced in an economy in a given period, usually 1 quarter or a year. It is a scorecard of a given country's economic health. Economists can use GDP to determine whether an economy is growing or experiencing a recession. Next. Number 41. What is hyperinflation? Hyperinflation is uncontrolled inflation, often associated with political or social disruption. It's used when inflation exceeds 50%. Typically caused by rapid growth of the supply of paper money. Hyperinflation happens when a country's government begins printing money to pay for its spending. Next. Number 42. What is indemnity? Indemnity is an undertaking, in the form of a contract, to make good someone else's loss. One party agrees to pay for potential losses or damages caused by another party. Next. Number 43. What is inflation? Inflation is a sustained increase in the general level of prices, so that a given amount of money buys less and less. It changes the ratio of money towards goods or services. More money is needed to get the same amount of goods and services, or the same amount of money will get a lower amount of a good or service. The 5 causes of inflation are increase in wages, increase in the price of raw materials, increase in taxes, decline in productivity, and the increase in money supply. Next. Number 44. What is initial public offering? IPO is the first time a company offers its shares for sale on a stock exchange. If a company has never issued equity to the public, and is doing so for the first time, it is known as an IPO. An IPO allows a company to raise capital from public investors. Next. Number 45. What is insolvency? Insolvency is the financial situation where the value of liabilities exceeds that of the assets and debt. Debts cannot be paid as they fall due. Insolvent liquidation occurs when a company cannot carry on business for financial reasons. Next. Number 46. What is intangible asset? Intangible assets are resources of a business with no measurable dollar value, but are valuable, such as a good reputation or brand, patents, trademarks, copyrights, licensing agreements. Intangible assets are recorded on a balance sheet, with most recorded as long-term assets, which is an asset that cannot be converted to cash quickly. Next. Number 47, what is internal audit? An internal audit is an examination or verification of a company's financial accounts and records by employees of the company appointed by the board of directors, providing independent assurance that the company's risk management, government, and internal controls are operating effectively. These audits ensure compliance with laws and regulations and help to maintain accurate and timely financial reporting and data collection. Next. Number 48, what is an investment bank? An investment bank is a financial institution operating at the wholesale end of the financial markets, focusing on fee-based activities and securities trading, rather than borrowing and lending. Also known as merchant banks. The primary goal of an investment bank is to advise businesses and governments on how to meet their financial challenges. If you don't know what you're doing, it's a jungle out there. This completes the chapter. Watch this space for the next chapter of Let's Talk Accounting.